Hey guys, this is Market Update. The following charts I'm about to show you are absolutely insane and are really telling about where we are in the current economic cycle. It's both an opportunity and also from a personal point of view, managing your portfolio. You really have to be aware of where things are going and where we're at right now. So I want to explain some of these charts in terms of what's happening with asset prices. The stock market is doing really well on the surface, but underneath something is being priced in. So we're going to look at that and how it relates to crypto as well and Bitcoin. So firstly, coming to the Bitcoin price, three things are playing out right now. The first is what seems to be this uptrend and a change in cycle. I'll show you the longer term chart as well that also shows this. But we've got some really interesting technicals playing out. The first one is like has been playing out for months almost at this point, which is this descending wedge within what is still an uptrend. So we have bounced from this support level, which is really good. Now, this was actually news-based rather than technicals-based because of the BlackRock ETF news, which is major, especially for Bitcoin and the amount of institutional flows that could potentially take up that product if it is accepted by the SEC, which most people believe BlackRock are not going to apply for that sort of thing unless they're very confident that it's going to get through. So very interesting times. The amount of capital that could flow in from BlackRock is, going to eclipse anything that's come before it. So that is obviously news-based. But what we've seen is a huge bounce off of this support level around 20, let's call it 25K. And, we're still in this descending wedge, which if you are a technical trader, you trade these breakouts for the wedge right here, which is this first purple line. And the wedge would be played out to this amount in terms of price, which would bring us up to the range high. So like I've said, and I've said from around this price level when we're here, that we're probably just in a sideways movement for the foreseeable future because we had a huge move and the part of the cycle that we're in isn't really the part of the cycle where we go on to make new highs. So what we've seen is range highs being rejected, range lows being supported. So short-term trading, maybe the odds would favor just trying to long a breakout here. Maybe it doesn't get to the range high, but there may be a decent trade, to try and play a breakout here. At least that's what people may do. Of course, if we get some bad news or something from the SEC, obviously, it could trade down to range lows again. But we have, from a technicals perspective, traded range highs, range lows. Longer term, we also have a huge chart pattern playing out, which is a cup and handle right here, and the breakout level or the level that you would trade is actually way up here around 40K. Now that's very, very long term, so that could take another year to play out. I believe we're going to get there, but that's just a crazy chart pattern to trade, and that's a very, very long term chart pattern, and you could have lots of different trading levels within that anyway. But that's playing out. A lot of people are looking at that much longer term. That could be a level for maybe the next part of the cycle, maybe after the halving. But for right now, I think, again, really, it's just choppy trade and sideways trade that I think is going to fool a lot of shorter term traders. But we're at range lows right now. So, maybe playing this to the upside is, a decent probability trade. Anyway, if you are a trader, Bybit deposit bonus down in the description, up to 30K, make a deposit. Good fiat on ramps there. BitGet link in description as well to a deposit bonus. So check those out if you are a trader. A lot is being made of the massive performance of the stock market this year, but actually under the surface, something else is happening. And so it's very telling of where we are in the cycle. So as a lot of people invest in market indices, they're seeing that their stocks are up, which is great, but it's only 5 to 7 stocks that are actually leading, mostly the tech and FANG stocks because of the AI trade. The vast majority of stocks within the S&P at least really haven't moved anywhere. And so that's telling of where we are in the current cycle. So just something to be aware of for managing your portfolio from that perspective. The first thing is we can see that leading economic indicators are still basically at a low. And when they're down below this midline here at 0, that's an indicator that we're seeing a recession. So 2000, 2008. Just here, obviously, huge dip during the pandemic. And then we're seeing that here as well, growth really tailing off as central banks try and restrict growth to get inflation under control. But what we've seen here is a divergence, which obviously some people are worried about. So you can see that the year over year change in the S&P, we're actually bouncing, whereas leading economic indicators are still very low and haven't bounced. So let's look further into that. The first thing is this is market breadth. You can see this is Jurian Timmer from Fidelity. The cap weighted price to earnings ratio is making new highs, but only 59% of the S&P is above its 50-day moving average. So that's not usually a bull market. So what we're seeing is huge, pricing of AI and that trade and tech. Tech usually prices in the future a lot more than other parts of the economy. So what we're seeing here is a divergence between the cyclical type stuff and kind of the real economy type trade, which, isn't being bid up at all. So that's showing economic weakness generally, but then the tech trade really taking off. And that's going to lead us into the next new cycle. The tech trade, including Bitcoin, will price in the next part of the cycle way before the other stocks. So that's what we're potentially seeing right here. This is the S&P 500 equal weighted index, and it isn't really showing massive outperformance of stocks. So that's also telling that investors don't really think that we're going into the really bullish part of the cycle right now. However, because tech and Bitcoin are outperforming, it shows that we could potentially see the next part of the cycle coming with lower rates because of that recession, because of higher unemployment. So if unemployment is going to start ticking up, which it looks like it will, that's obviously a real danger just generally for people to manage their costs and have enough fiat currency to meet their liabilities. The stock market is telling us that as well, because Bitcoin tech are outperforming, showing that they're trying to price in that part of the economic cycle. But in the real economy, which is going to lag what prices are doing in stocks, it's a worry for, generally the population as unemployment ticks higher. A lot has been made recently of a certain piece of data that shows us that bonds are yielding the same as the stock market right now. And it's been used to suggest, why would anyone invest in stocks or growth assets? Well, let's have a look at that and how it relates to individual investors and, how they should invest over a 5 or 10 year period. The first thing is right now, this part of the economic cycle or the rate hiking cycle, we can see that real interest rates are in positive territory right now, as priced in by the TIPS market, which is a treasury inflation protected securities market. You can see positive real rates, much higher than previous years. So it could be suggested that this potentially is the peak in the rate cycle, as interest rates have moved into positive territory from what we had around here, which was negative real rates. Now, if you remember around this time, this is when Bitcoin usually does very well. You can't invest for this part of the cycle. You have to invest for the next part of the cycle or just in secular growth over 5 to 10 years. So obviously each individual trader is different, but the next part of the cycle doesn't seem to be towards higher rates, but more towards lower rates, maybe not negative real rates, but this spread may be narrowing. And so that's potentially positive for risk assets as we go through that cycle. This is the piece of data that came out. You can see that the 3-month treasury rate yielding around 5% right now, which is the same as the S&P earnings yield. And so why would anyone invest in the S&P? Well, one reason only, and that is capital growth. Capital growth is something you absolutely must need if you're a younger person looking to protect capital over the long term, because 5% that you're getting in treasuries is not 5% because of currency debasement that's happening. I'll show you some charts in a second. So what we're seeing with this part of the cycle is potentially US government bonds being, about as high yielding as they can possibly get in this cycle, unless something crazy happens, inflation goes even further to the wrong side and they start raising rates even further, which would result in even worse recession and higher unemployment, which again leads to lower rates again. So this cycle just carries on and on. This is potentially showing a potential top in rates. This is also showing rates are incredibly restrictive right now. The next part of the cycle is for potential weaker economy, weaker growth, which means, central banks get a little bit loose with their policy if inflation keeps coming down in the way it is now. So Bitcoin is also pricing this in. You have the drawdown, and now we're in the recovery phase as the market tries to digest the fact that there is a slowdown in the economy. The extent to which the economy is slowing down is still uncertain, but that's what we're pricing in right now. And of course, as that comes out in the data, if inflation is tempered, then you're going to see a much easier environment from central banks. And that's something where Bitcoin does, produce returns as well. So why would you invest in anything if you're getting 5 months in treasuries? because there's no capital gains here, there's no growth here, you're just getting 5%. Whereas Bitcoin is pricing in growth and the turn in the rate hiking cycle. Bitcoin is up 65% year to date. Stocks are up if you're invested in S&P, maybe 20% or something like that. So it's not about yield. If you're a young investor, it's about growth to protect yourself from what we're seeing in the long term, which is currency debasement because of slow and sluggish economic growth. So what the market is pricing in right now, in the base case, it does not seem to be higher structural inflation. It seems to be that the market thinks tech and Bitcoin outperform because central banks are towards the peak of their hawkishness, moving through to much easier policy over the next 6, 12, and 18 months. The one thing to look for is unemployment. Once that starts ticking up, we'll know that the inflation in the economy will start to tick down even further, especially what the Fed looks at, which is core services, which is basically wages and demand for wages and employees within the economy. So that's the important thing to look at, and that's going to tell the Fed what to do as well, which is why I said fiat currency liabilities must be met for the individual over the next 6 to 12 months, because the extent to which this is going to occur is very uncertain. Bitcoin and tech is pricing it in though. And then you have that macro plus the micro for Bitcoin, which is the BlackRock ETF, which is potentially very, very big, maybe in 6 to 8 months time, if that gets approved. So, decent scenario for BTC right here, in my opinion. If you are a trader, Bybit deposit bonus up to 30K in the description. Check out BitGet as well. Decent fiat currency on ramps for them as well. So check those deposit bonuses in the description down below. I'm James with MoneyZG. Cheers for watching, and I'll see you in the next one.